Ladies and gentlemen, welcome back to the channel. AMC Stock is up a cool 1.5%. This is actually a very big move relative to what you're seeing in the markets today. S&P 500 is down over 1%. The NASDAQ as well, down over 1%. So what is causing this outperformance with AMC Stock? Could it actually be a price target reduction? Yeah, we actually had Citigroup come out and lower their price target on AMC Stock today, but I think what remains true is what I have said for the last couple of days now, really the last week and a half or so. This week's probably going to be pretty bullish for AMC. And I do think even towards the end of the week, it's probably going to get even more bullish. So we're going to go ahead and get into that. We're going to run through all of the data and everything else you need to know here on the day. Hit the like button and subscribe to the channel if you have not done so already. If you have not come across this channel, well, today is your lucky day. So AMC stock is up about 1.5%. Now, in the broad scheme of things, this is huge. Why? Broader markets are getting absolutely destroyed. So you're seeing a huge outperformance for AMC stock today. So that is very positive, right? That's great news. S&P is currently down 1.2%. NASDAQ 100 currently down 1.34%. AMC stock should be down 5% or more. A lot of your small and mid-cap stocks are down quite a bit. And you're just not seeing that here today with AMC stock. So that is fantastic. Now, let's go ahead and look at exactly what's happening today. So AMC Entertainment price target lowered to $4.75 at Citigroup. They did this on Tuesday, and they do think AMC could see downside of 41.68%. Now, they go on to say that Citi has AMC at a sell rating. Roth MKM issued a sell rating on shares of AMC Entertainment in a research report on Wednesday, August 16th. So you've seen quite a few kind of downgrades recently, besides B. Riley Securities, which lifted their price target on AMC Entertainment from $4.50 to $45 and gave the stock a neutral rating in a research report on Tuesday, September 5th. This really didn't have too much of a kind of reaction to AMC stock, but even though you're getting kind of downgraded today from Citi, you're still doing very, very well. And I think that is just a testament to the times of where AMC is at. Now, if you guys have not heard this before, if you guys have not heard me say this before in particular, nobody else is really saying this, but I think it's the only way to look at AMC right now. AMC stock, on a risk to reward, very, very bad, to be sure, right now. The odds that AMC continues to fall are a lot lower than your probability of making money or the stock going higher. So this Friday, it's going to be the last day of fiscal year 2023. If you have gains in any stocks, if you have gains in short positions, if you want to realize those gains for your clients, if you want to roll over positions, if you want to hedge positions, buy positions, hold positions, your last day to do that in calendar year 2023 is on Friday. So last week was the 38th week of the year. This week is the 39th week of the year. This is by far the worst period for the markets in any given year. It's the end of fiscal year 2023. It's the end of every fiscal year. A new one starts on October 1st. So hedge funds and institutions are really reevaluating their portfolios right now. AMC stock has fallen a lot, and just the odds of AMC continuing to fall don't look that great. That's not a bet that has a good outcome of succeeding. Okay, so that's a big reason why I do think towards the end of this week, things could get more bullish for AMC stock, not less bullish. Now, then again, you do have broader market issues out there. You do have a lot of data coming out this week, a potential government shutdown, which looks likely on October 1st, again, the end of fiscal year 2023. These things might not be great for the markets. You never know how AMC is going to react to the markets, but what you're seeing here today is very, very positive. So again, that is a risk factor that you need to know heading into the rest of this week. But again, you're probably going to continue to see a rally in AMC stock. Now, let's break down some of the other things that are happening today. We did get some economic data that came out. We'll go ahead and run through this data here for you guys briefly. So today you did get the S&P Case-Shiller home price year over year, and that came in at positive 0.1%. Your month over month came in at 0.6%. That was better than the 0.7% estimate, so a little bit lower. Your house price year over year came in at 4.6%, much higher than the 2.9% estimate. And your house price index month over month came in at 0.8%, much higher than 0.2%. But again, I really don't think inflation even matters at this point for the markets. I think it's very clear that you are in a period in which the Fed just will not stop until they see a recession, or at least a severe economic downturn coming. Until that happens, the Fed's not going to stop raising rates. They're not going to cut rates. They're going to push us into a recession. That's essentially what they told us the last FOMC press conference. So I don't really think inflation data really matters. I think the markets will react a little bit to it. But again, the markets understand what I'm saying to you guys. They don't even care about the inflation data anymore. Now, if we take a look at the Richmond Fed data, Richmond Fed manufacturing shipments came in at 7. There was no estimate there. Richmond Fed services came in at 4. This was higher than the 3 estimate. Richmond Fed Manufacturing Index came in at 5. You were expecting -6. Dallas Fed Service Revenue came in at 8.7. You were expecting 8. And Dallas Fed Services Index came in at -8.6. You were expecting -6. So a little bit better here in terms of some of the service number out of the Dallas region. Richmond Fed did do pretty dang well in general, beating estimates on basically all of those data points. Now, you are going to be getting here shortly Fed Bowman that will be speaking. We heard from Fed Kashkari earlier in the day today, and he said there's a 60% chance of a soft landing, and there is a really good chance that we get another rate hike. So again, the Fed's not backing off of the delusional stance about the economy. They're just continuing to hammer down the same points over and over and over again, and further solidifying we're heading into a recession. So Fed Kashkari, as well as some of this data, is probably the reason why the markets are down. But again, the same logic that applies for AMC and what I previously said, the risk to reward being short in AMC doesn't make a whole lot of sense heading into fiscal year 2024. Your odds of a rally in AMC stock are much higher given the stock has fallen a lot compared to a continued drop. But in the broader markets, it's the complete opposite. The risk of a drop in 2024 is a lot higher than a continued rally, especially if we are heading into a recession in 2024 at some point. So it would make sense why a lot of hedge funds and institutions are selling stocks and hedging their portfolio into the end of this week to book some of those profits, because 2024 looks pretty dang uncertain. Now, today, 2-year Treasury yields are up about 1.5 basis points at 5.14%. Your 10-year Treasury yields are flat on the day, but you're actually seeing the long end of the curve, your 20, 30-year bonds that are actually increasing their yields. You have seen the 10-year bond rocketing to a new high of this cycle as well. So what this is doing for the yield curve inversion is uninverting the yield curve. This happens before recessions, right? It's not when the yield curve is inverting that the problem is here. It's when you start to uninvert. If you look at the 10 and the 2-year, you're now inverted a 0.5%. I like to look at the 10 and the 3-month yield curve a little bit more. And if we pull that one up, you're really uninverting here. You were inverted 1.88% at the low. Now you're only inverted 1.03%. So you're really starting to get an uninversion. Again, this happens right before you go into a recession. So if you're looking at something that is more definitive, that has a unbroken track record, it is the yield curve uninverting. It's never, been a good thing, okay? So it's happening now. Who knows? This time could be different. That's always a possibility. But I would say probably not. The bond market is 3 to 5 times larger than the stock market, just depending on what period of time you're looking at. So the bond market tends to get things right more than equity markets. So that's why you always want to listen to the bond market. Over the long term, the bond market is way more accurate than the stock market. So there is that, guys. Now, as you know, we do have a lot of FTDs that also come due this week at some point. Today is September 26th, so that means 36.5 million FTDs come due. About 51 million FTDs come due tomorrow as well. So quite a bit of FTDs that do come due over the next couple of days here. And then if you look at the Stocko tracker data, this is the first time in a long time that you have seen about a 2-to-1 ratio for about 2 times the amount of calls rather than puts. Calls in the money of 16,618. Calls out the money 97,462. Puts in the money about 11,000. Puts out the money of 46,841. So it's been a long time since you have seen a puts call ratio that has, exceeded 2 times the amount of calls relative to puts. I can't remember a time in recent history that has actually happened. Now, if we go ahead and take a look at the Ortex data here for AMC stock as well, live short interest of free float at 12.73%, up 1.59% here on the day. If we also take a look at the amount of shares currently sold short of 25.18 million, that is higher than even the last exchange reported short interest that we did see. Cost to borrow fees 4.25%. Cost to borrow max 11.08%. Cost to borrow minimum 2.32%. Interactive brokers cost to borrow fees at about 3% as well. So relatively low numbers, but we have seen a little bit more upside volatility as of recently. So you are seeing the cost to borrow max, which is starting to increase now again at 11%, higher than the 5, 6, 7, 8% that we have seen recently, but far off of where we have been over the past year or so with cost to borrow fees for a long time there that were in between 300 and 1,000+%. So a little bit lower, but again, we haven't seen that much upside volatility. If we do get a rally throughout the next couple of days into the end of this week, cost to borrow fees will likely continue to rise. Now, if we look at the short score, that is at 68. $201.74 million worth of short positions currently in AMC stock. 12.53% estimated short interest of free float. Free float out on loan at 13.23%. Shares out on loan 26.16 million. Days to cover 1.88. Cost to borrow 5.74%. And utilization sitting at 55.3%. So there you have it, the AI investor sentiment as well. I do want to point this out for you guys. 31.3% of investors are bullish, which is the lowest level that you have seen since mid-August. 34.1% of investors are neutral, and 34.6% of investors are bearish. This is the highest point that you have been at since the week of August 30th. So since the beginning of September. In the grand scope of things, a lot of people are still pretty dang bullish. The 1 week or the 1 year high for bears is 60.8%. The 1 year high for bulls, 51.4%. 1 year neutral high of 39.9%. So if the situation gets worse, the sell-off does continue, well, more people could get bearish, and that just means more downside pressure could be added here on the markets. And that 1 year bearish high was back almost a year ago exactly on September 28th, 2022. The 1 year bullish high was on July 19th of 2023. So really a push and pull that's going on here. Again, just to reiterate, the risk to reward does not look favorable if you're a hedge fund and you're short in AMC heading into 2024. So you likely do see a lot of potential shorts covering covering on short positions, reducing that downside exposure, even buying shares of AMC. We've seen a lot of banks, hedge funds, and institutions like Citadel, Jane Street, so on and so forth, buying shares of AMC, going net long in AMC. But just overall, it doesn't make sense to be short in AMC heading into fiscal year 2024. But on the contrary, the markets, well, it's a total opposite of AMC. The risk reward looks a lot better to get out of stocks now and see what happens in 2024, or hedge your positions at the very least. So you could see more downside pressure for markets throughout the rest of this week, whereas you could see upside pressure for AMC stock. Hopefully this makes some sense. If you made it to the end of this video, hit that like button as well as subscribe to the channel. That is going to do it for this one. You guys enjoy the rest of your day, and I will see you in the next one.